point of time before we move on to our next guest of the show. If you look at both of the benchmark indices have been trading mildly with gains. Nifty still above that 25,400 mark. But still testing those levels which was yesterday's close at this point of time. If you look at some of the sectoral indices, everyone has been trading, most of the sectoral indices have been trading with very slim gains at this point of time. Nifty Metal Index is the sole index which is trading with about 0.2% cut. So a very quiet market at this point of time. Hopefully, maybe this is what they are waiting for, is the quicker from the US-India trade agreement, and that is what it could be the next catalyst for the markets. But India wicks broader into the markets. If you look at the mid-cap and small-cap indices, both of them also with about very flat trade at this point of time. But with that, let's quickly move on to our next guest of the show. We have Anil Rego, founder, Right Horizon, joining us. Anil, good morning. How does the market look like at the current juncture? We have been moving in higher range now, but it lacks any enthusiasm. What can be the next catalyst?
Yeah, so I think from a fundamental standpoint, I think there are, a good number of levers. Yes, markets after having run up quite a bit, coming and taking a pause, and also, mid and small caps correcting after, very, very good rally is something that I think should be expected. And we believe that these are points when, you can start looking at, investing. So reasonably positive at this point. Combination of corporate profit growth, we think, will also be reasonably strong. Government capex has sort of come in. Okay, so and hopefully you will also see a trade deal, at some point of time, which has been, getting people a little nervous. So I think there are sufficient triggers also, if you ask me, for us to start seeing things improve.
Anil, how do you assess the passage of this Trump's big, beautiful bill? Do you see some concerns of the deficit on the US economy and, of course, the spillover to the world?
Yeah, so I think the US has a bit of a problem. Okay, so fundamentally, I think that's where I guess Trump also is trying to see how he can sort of reduce trade deficits, how he can also reduce fiscal deficits. So I think this whole stuff around, looking at avenues to bring in revenue, right from through trade, any imports that happen into the US. Secondly, also now even capital flows, the 1% thing. So these I think will have a moderate impact. But the way I look at it, even for the US, it's important for them also not to shake up things too much, because if they do so, their economy also, can see, it will be brittle, and you can see negatives out there. And that is something they also can't afford. So I'm not as concerned. I think some of the pressure was to, get everybody to the table. I think so those have happened. And now I think one by one, we'll also start seeing deals happening with sort of various countries. Hopefully, India will be the next. We already saw something with Vietnam. And so I think that's the direction that we all will be seeing.
Okay, we did see an important update that came in today. SEBI borrowing Jane Street from the securities market, and the group was found to be running large cash equivalent positions in the index options. How do you expect and how do you see this development affecting the trade sentiment or even volumes going ahead?
Yeah, so ideally, I think, maybe intervening where there is sort of misuse of the system, can be important, I think, to bring in. Okay, but at the same time, I think we must be careful not to, restrict, say, genuine people coming in and taking positions, right? So I think that is something which will be important for FIIs and stuff. So we'll have to see how to balance. See, where there's misuse, where, a number of them, including the co-location and stuff like that, those definitely are things to look at. But if I think we have to draw the line between saying that this is misuse or this is just speculative activity, and restricting can only, also reduce the depth of the market, right? So I think we should see how to increase the depth of the market as we go forward.
Okay, increase the depth of the market going forward. Anil, let's talk about a little bit about earnings because given that everyone is expecting FY26 to be better than FY25 in terms of growth, what are your estimates for the first quarter going ahead?
Yes, so I think one would expect this quarter to be decent. So if we saw even from the previous quarters and stuff, there has, of course, the October, November, December quarter was bad, and then March, and so I think we will continue to see sort of an improving trend out there. I believe that it will take a little bit more time because I think corporate spending still needs to rebound. The corporate capex, needs to rebound. So I think for some more time, the government support, I think, will become important. So I would believe maybe somewhere around 12% type of 12, 14% type of earnings growth between various constituents, whether it's large cap and mid cap.
Okay, okay. All right. 12 to 13% earnings growth. And this is estimating for your first quarter itself, right, Anil?
Yeah, and that's sort of through the year. So hopefully we will be within a couple of percent of that in the first quarter.
Okay, okay. Anil, yeah, if you look at the fourth quarter, financials definitely led one of the earnings growth. But do you believe that they will continue to shine in the first quarter as well, now that we have the rate cuts also?
Yeah, so what is interesting is some of the sectors like consumer durables and chemicals and capital goods, all of them, even PSU banks, earnings growth was sort of decent. And I think that typically I don't see earnings growth suddenly, come in one quarter and go away. So I think that sort of trend will stay. And I think that will also give comfort. And so when I'm saying sort of an increasing, earnings growth, I think that's something which will also aid specific sectors, also which are likely to do well.
Okay, okay. And volume growth, that was a challenge for majority of the consumer stocks. Do you believe the situation has improved going ahead? And what kind of growth are you estimating from consumer staples and discretionary front?
Yes, so definitely volumes growth, including if you see automobiles and stuff as well, has some maybe room to grow, right? So the things are definitely not yet in a rosy, picture. It's come from a quarter which it was sort of very poor. So I think that's what I would sort of expect. Okay, but yes, I think one thing that all of us will be very closely watching is, how is, the growth in volumes happening. And hopefully, we'll have a good monsoon and also the rural spending. If that also can sort of improve, then I think, you'll probably see volume growth also coming back. And that's something that we would also expect.
Okay, okay. And what about the capital market stocks? Because they seem to be doing quite well in recent days. Do you believe that this is going to be the next flavor of the market going ahead?
Yeah, definitely. Capital goods is, even for us, it's a sector that, we have reasonable exposure to. Also because of various macro, trends and factors. I think the penetration of equity, is going to continue to increase. And across the board, we've seen right from, say, COVID, there was a big spurt. I think demographically as well, if you look at, the HNIs and the ultra HNIs, that, segment is growing very, very fast. And if you also see along with that, if earnings becomes, stable and strong, if private capex, etc., comes in. And so once there's a feel good factor and people also start investing and things become a lot more comfortable right from a grounds up level, I think that will also add. So definitely one believes that this sector is a sector that will do very well, maybe for a longer period as well.
Okay. I think now that you mentioned a lot of sectors that you have been bullish on, take us something that you believe that there is growth that is still elusive on those sectors.
Yeah, so I think one to carefully watch is the banks, including the private banks. Okay, and Also NBFCs, of course, because both of these had taken a bit of a lull, and so the NBFCs also have sort of started to pick up. So I think some of these sectors, in our view, will also aid a more broad-based recovery. Okay, so that is something. Then we have sectors like pharma, etc. Okay, so of course there are niche ones like within financial services, say the wealth management. Apart from pharma, we also like hospitals. Okay, so there are, I think, you have to be careful as we go forward to see which are the pockets that we can see the larger growth and the tailwinds, and then I think be able to choose the sectors that one would like to bet on.
Okay, okay. How are you finding the valuations of the broader markets? Everyone is saying that, market is mostly priced to perfection on a headline index level, but broader markets have once again turned expensive. How would you suggest investors to approach that space?
Yeah, I still think that where if I look at, let's say, the Nifty is one, and there I see a little more comfort, right? So if you go back and see the broader market, if you see, say, the BSE 500 or mid and small, especially mid, right? So valuations are reasonable. Okay, so the question now is whether we see earnings growth, right? Because if we see strong earnings growth there, then maybe it will sustain for some more time. My experience of market cycles is that sometimes these valuations go to extreme levels. Okay, so I still think there is a little bit more headroom left also for the broader market. Okay, and I'm not saying some of those really extreme levels, and there are pockets where at a stock level you can still go back and sort of invest. Yes, you pay a price for quality as well. So if there is growth which is there in some of these stocks and strong track record of it, then you may find valuations also there higher. I would also believe that, see, the mid cap side valuations are higher also because I think of the way the definition of large, mid, and small caps, because a lot of money came into mid caps, and a lot of that went into that 100 to 250, 101 to 250 stocks, right? So to that extent, a lot of money came into this one pocket. Okay, so I think that considering that mutual fund flows are still strong, that's my other part, right? Because if that continues to be strong, I think valuation will still go and still stretch a little further. So that's my view. While it is at the higher end of the spectrum, I think that it's not yet an extreme, and combined with that, I see also earnings growth coming back into some of the mid and small cap stocks segments.
Anil, you did mention that you're seeing the valuations a little stretched, but what do you believe? Everyone in the street is talking about July could be the month, or even August could be the month for Nifty clinching its all-time highs. I know you don't provide any short-term view, but anything that you're watching out for?
No, so that's our view as well, because I think sometimes you have a price correction, sometimes you have a time correction. So I think right now we'll be almost we'll be like 9 months into a time correction. Yes, marginally also in certain pockets you have it below the index. Okay, so from that standpoint, earnings growth itself gives a bit of a time correction, and makes the P ratios and valuations look better. So I think that is something that I also expect the coming quarter. And again, if you go cycle wise, right, in terms of which time of the year, typically May is sell in May and go away. So post that, typically between now and December is where you'll see the cycle coming back to even markets doing well on a historical basis. So I think that will also sort of come in, and one is hoping that we should see even in the shorter term, we should probably see the index doing well.
Okay, all right. All right, with that, we have to let you go, Anil, but thank you so much for your time, and we hope that we connect with you soon.
Yeah.
Right, let's take a quick check of the market.